Yes, as you look at the retail landscape, you continue to see consumers migrate towards more of the value and convenience channels. And I think Dollar General and both Dollar Tree offer significant value. So I think you continue to see that shift within the retail landscape.
Going the other way today as well is Ollie's, which just had been one of the best performers this year and now is down 32% in a month. Is Ollie's not executing well, or are they facing a unique challenge that tells us anything?
Yeah, so Ollie's I don't formally cover. I think with the dollar stores, such as Dollar Tree, you saw a 4% comp. I think it is really largely driven by the company initiative. So the management team at Dollar Tree has really embarked on a number of initiatives to really accelerate that business. So I think it really speaks to the strength of the management team and execution versus some other macro factors out there.
Oh, sure. And Lauren, that's what makes this so striking right now. You know, these companies were one of the first to be mentioned as feeling a direct tariff hit. The profit margins would shrink. So many of the products come from China. And yet Dollar General's earnings were almost 25 cents better than expected, and their revenue came in $100 million higher than expected. Whoa, it's quite incredible.
I think, and to go back to the Ollie's point quickly here, I think that spoke less to weaknesses in the entire industry. I think that is more of a one-off thing. The CEO actually came out and said on the earnings call, we actually might have gotten too ahead of ourselves in opening stores, so maybe they were too aggressive there. They actually were one company to take advantage of the opportunity with Toys R Us going out of business. They went in and took more than a dozen Toys R Us stores and moved into those. So maybe they realized, or what they said was those stores ended up cannibalizing some of their existing stores, so might have gotten too ahead of themselves. But back to your question, yeah, I think overall what we continue to see and what I cover a lot of is the separation of whether you're at the mall or are you off mall. A lot of the, Dollar General, Dollar Tree, Five Below, Ollie's, all obviously off mall.
Yes.
And it's the department stores, the inline specialty apparel retailers that continue to struggle.
And the value plays, Rupesh. It's interesting. I mean, we've talked for years about TJ Maxx and that cannibalizing the department store and obviously the trends there. Walmart, another great example of a company that has always put value first and is seeing those efforts pay off. So when people look at the tariffs that are coming in September and in December, is that going to be tougher sledding from Dollar General from here, though?
Yeah, so as I look forward for Dollar General, they've already incorporated the next rounds of tariffs within their guidance. And if you look at Dollar General, they import about 6% of their goods internationally. And my guess is China is right now about half that business. And they've already mitigated, I think, a good portion of that exposure. So we feel very good about Dollar General's ability to manage the tariffs. And if you end up going to 25% tariffs in Tier 4 all the products, then I think they will end up resorting to taking some pricing.
Who is more exposed in a bad way, Rupesh, in the space that you cover?
Yeah, so I think Dollar Tree would be more exposed. So they import a significantly higher amount of products from China. So I think if you go from 10 to 25, you would see a bigger impact. And the other key difference today and why Dollar Tree is down and Dollar General is up is Dollar Tree's guidance did not incorporate the impact of future tariffs.